We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to review a sector. Now this sector is the GDX. Now what you're seeing on the screen is my industry rank table based on relative strength or alpha. And the GDX compared to SPY is ranking number 1 where my cursor is. When it's ranked green, that means it's in the top half. So it's been bouncing up there, now it's ranking 1. It has an RTT rank of 66 compared to the 82 below. That basically means it's coming off a very deep low. So what does that mean? I'll just explain. Scroll down here and you'll see a chart. The red line is the SPY and the black line is the GDX and the pink line is the ratio of GDX to SPY. And as you can see here, the ratio is turning up, the relative strength turning up, right? It hasn't got above 0 yet, unlike its other counterparts like semiconductors already, have already taken off. GDX is back down here somewhere. Now let's talk a bit about fundamentals and the strength that's going to come into the stock market. Here's what we know for fact. The bond market on the 10-year topped out about 3.2% and had to sell off because couldn't take it anymore. Couldn't get to 4, couldn't get to 3.5. The Federal Reserve is reversing its quantitative tightening, and moving into quantitative easing under the disguise of using repos. The size of the repo is growing as we speak. So basically QE forever is on. Now, the size of the QE will fluctuate depending on how much stress there is in the market. And there are high statistics for a recession looming either mid-2020 or 2021. Now, a recession's a funny thing. The NBR, a private organisation, name a recession. GDP does not have to go negative. They measure, I don't know what they measure, but they measure quite a few things. But basically means a slump. Now, some have said we're going to have a mild recession. You may have a mild recession in the sense of, economic statistics, but you're going to have a pretty much a major crash of the debt adjustment because there's so much debt out there, and if leverage is busted just a little bit, it's going to set off a domino effect throughout the market. So what that basically means, maybe a mild economic recession, but like 1991, but on the leverage side and on the asset price side, it could be at least 30-40% on asset prices. So even though the Dow Jones may still scream up to 38,000 or around 35,000, I've placed in the main blog, it can just scream just as easily with all the computer models turning off and liquidity dry up, and as it rolls down to 15,000. Now, as I understand it, the Federal Reserve does not have legal authority to buy stocks outright. They don't have the legal authority to act like Japan, who can buy stocks outright. So that's a law that will probably change after stocks plummet. Now, when I say down 30-40%, that is a conservative estimate, and I'm going to quote the Guggenheim, was it? I'll get the article. Yeah, Guggenheim model. Let's see. Scott Maynard of Guggenheim predicts a 40-50% correction coming up in the next 12 to 18 months. Just Google if you want to check that. Google, what's his name? Scott Maynard. So why do I mention I've mentioned the fact that a recession is highly likely. So if you've got a recession which is highly likely, that means QE is going to double, triple, quadruple. And obviously that's going to creep into gold, it's going to creep into silver, it's going to creep into cryptocurrency, and it's definitely going to creep into the gold stocks. Now you can bet the swings will be long and wide, so investing in gold stocks is is a high vol type experience, so it's something you have to be aware of, but I think it's going to have a lot of reward in the end. Now, I must remind that in the 1930s, when gold had some relative importance, they had QE in the 1930s, gold stocks did quite well. So we'll just have a quick look at the GDX. Now, the GDX has created a momentum shift, as we all know about, a massive rally. Boom there. From there, in a period of dullness, confusion, and now we've had some Wyckoff waves of intent. This whole pattern here you're seeing in front of you, right from over there, is probably 101 Wyckoff dead easy. Big volume on the up. See, look at this volume change in the GDX ETF. Big money's coming into it, so the fundamental people within the institutions are saying gold stocks are going to be a thing, gold's going to be a thing, and the money has spoken. It's gone into the market. And the ETF works like this. It doesn't have a limited amount of shares. They create more shares if there's more demand, and there's been more demand, so the volume's gone up. So the GDX ETF goes and buys the underlying real stocks, stocks within the ETF, and the money trickles through. So you can say at the moment the Wyckoff pattern in GDX is incredibly bullish. We're forming a pattern up in air resistance of 30, which we refer to as a springboard. It may go on for a few more months. Keep an eye on that. Every chance to partake. You should start researching your favourite gold stocks. Get your gold stock newsletter or whatever you're following, and start considering these as a high trade, high success trade, and high vol type trade. Momentum, as you can see down here, isn't picking up. And I scroll down a couple of my indicators. These are my RTT OBV volume indicators, and they show good support for price and volume action. And relative strength, we've already talked about relative strength. We've talked about relative strength versus the SPY. Now we're going to talk relative strength versus itself, which is the typical RSI index. And as you can see here, there's more blue and red on the screen, so that means the current phase of the price action is stronger than the previous phases of the price action. We've got momentum ticking up here, as mentioned. All looking very attractive. Higher lows momentum. Can't argue with that. We've got higher volume waves, obviously, on the swing, the green versus the red. And so it's all very much perfect Wyckoff. We're looking at moving averages. Okay, here's some moving averages here. We're looking at weekly. What's the big black one? That is a 500 a week moving average, which was upper resistance. And it's, what can I say? It's just moving up. Here's the daily moving averages. Here we are. Here's the daily moving averages. And the red line is the 100, and the purple is the 200. So the 50 is broken. So it's going to consolidate anywhere between 25 and 28, and probably hold up above 28. So this is the springboard building. This is not a deep consolidation. I'll just do a old Fibonacci on that quickly. It's holding just above 50%. What can I say? Gold stocks are primed. There we are. That's what's this one? This is another GDX weekly that I've got of a lower level, and the black one is 400 week, which is double of the 200. So yes, I can't say why that can't be attractive. And I think I'll just scroll down to my pointed figure chart. See, perfect Wyckoff. Boom, big base, upper resistance. Boom. Strength, sign of strength, automatic reaction, phase B, mucking around, teasing you. Bear trap, spring action, more spring action. Last point of supply, another last point of supply, but this is actually a springboard. Watch this action over the last couple of months, and as it grows, it's going to break out the 30. Gold will go with it, silver will go with it, and no doubt Bitcoin will go with it as well, because it's all the same trade. When will this happen? Probably when the institutions and the Fed realise that the public are cotton on to their game, that this repo stuff is really QE, and it's QE forever, and the Fed balance sheet keeps on expanding. I don't know why the public hasn't cotton on to now, but I suppose that'll be the timing. And as we can see here, the volume on the upswings, the green shade is bigger than the volume on the downswings. So typical strength there. What can I say? Keep an eye on gold stocks. They have purpose. They are showing Wyckoff ways of intent. And if you been a bit slow to consider them, the time is now to start to review, as I believe the Dow will continue to go higher over the next 6 to 9 months at least. Gold stocks will be one of the leading sectors with gold, and maybe a better percentage earner. Thanks for watching.